Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today's Tuesday, January 8th. Hope you guys are having a wonderful morning thus far. Kind of want to apologize. I'm kind of, again, I think, yes, I mentioned I'm kind of using some new items here for these presentations, and one of them is Google Docs. So I used to use PowerPoint. Now I'm trying to use Google Docs, and this thing down here keeps popping up here, and I'm not sure how to keep it away from there. So my apologies for any that being a distraction throughout this presentation here. With that said, let's jump right into it. We'll start off with the economic calendar. And the first item here on the docket is the NFIB Small Business Index. This is kind of the confidence level for small businesses. And as you can see, from November, we had 104.8. It dipped slightly down to 104.4. And the main, of course, concerns that they have is finding the right qualified employees for themselves. So that's the biggest thing is finding the qualified. That seems to be the keyword, qualified. So it seems like a lot of people need to probably get back to some type of training or some sort of trade work to get qualified, because it seems like those are jobs that are open, don't necessarily have the people to come in and are qualified for those type of positions that are open. So we got a lot of positions opening, just not enough qualified people. So we need to try to get those people qualified. Last but not least, we got the job openings for the month of November. October was a pretty good month. We had a lot of openings at 7.1, but a lot of those positions look like they've been kind of filled. As you can see, it's dropping down to 6.9 million. To move ahead here, the headline news, stock market's a little mixed. NASDAQ is the only one that's down so far this morning. It had some pretty big news out of Samsung. They kind of reiterated basically what Apple said. Apple said they're kind of gave a forewarning about the fourth quarter earnings reports, and they're giving the same thing. And they're basically saying that like a steeper forewarning, like a 29% drop in fourth quarter. So again, that seems to be kind of racking the tech stocks right now. So Nasdaq's the only one that's a negative, whereas the Dow and S&P are all in the positive territory, and it's mostly due to the carryover. We got again, we had the Fed Chief Powell gave out rather a dovish comments at at a summit he was at with other former Fed heads there, and we also had the job numbers were really great on Friday. And then we got the U.S.-China optimism over U.S.-China, whereas basically the head trade person with China was one of the high-level people that were there. Mr. He were present at those meetings with the talks between the U.S. and China, and that seemed to bode well with investors. It's creating some positive sentiment right now in the markets. So as a result, the stock, for the most part, stock market's up, and as a result, it's kind of pulling the bond market down a little bit. And we're right now kind of testing this line here, which is an important line primarily because if you look here, we have this trend here, and it's pretty much right on the trend here. Now, if it breaks below that and stays below that, you're kind of breaking the trend and could worsen things and have a reversal here for mortgage-backed securities, which won't bode well for interest rates. So I would say the interest rates are right now about the same as where we left off. We're currently down about 8 basis points, but right now it's kind of testing that. It could worsen today than what we left off yesterday. Yesterday we did have a price for the worst, as you can see here. And then on the other hand, we got the treasuries. Treasuries are up a little bit. We're actually up about 2.7. So I'm not. This seems to be a little low on the chart here, but as you can see, we were testing its floor of support right here the last 2 days, even starting off below it and rising upwards. Right now we are again about 2.7 right now for the 10-year yields. All right, so that wraps things up. Any news that comes throughout the day, I will post over on my Twitter account at Mike Bjork. If you want to get those updates, just go ahead and follow me there. Otherwise, you guys have a great rest of your day. Thanks so much for watching, and hope to see you guys tomorrow. Bye-bye.